Hey there traders and financial enthusiasts, welcome back to my channel once again. Today this is CN on the screen. You're watching CN Great Councils and Forex Trade, and in today's video we've got a fascinating topic that's absolutely crucial for anyone involved in Forex or financial market trading. The fair value gap is what we're looking at today. And if you've ever wondered how to identify potential mispricing in the market, because that's exactly what it is, mispricing, and capitalize on them, then you are in the right place. You're watching the right video today, right? Here we don't just teach, we tell you, we give you examples, and then we show you how it's playing out real time, right? That's what we do on this channel. By the end of this video, you should be able to have a solid understanding of what the fair value gap is, how to spot it on a trading chart, and why it's such a game changer for traders like you and me. So grab your pen and paper because we are diving deep. Before we go deeper, please, I'd like you to hit that subscribe button if you've not done so. And if you're a new subscriber, you're welcome. Hit that subscribe button and then turn on notification, because we've got tons and tons of content to help you grow in your trading career. And all our old subscribers, please welcome. Please grab your pen and your paper and let's get started. Now, the first thing we want to look at is understanding fair value gap. That's first thing first. So let's break down what the fair value of a particular tradable asset really means, right? The fair value of an asset represents its theoretical or intrinsic value based on fundamental factors, market conditions, and other relevant considerations. It's like the North Star for traders, okay? The fair value gap is just like the North Star for traders. Now, the price which is an asset would have in perfect, okay, rational and efficient market where all available information is fully reflected. That is the fair value of an asset, okay, where the price of that particular asset would have a kind of a perfect, rational and efficient structure and level where all available information is fully reflected in the asset price. But that is never the case, right? So in the trading world, price can never have, I mean, a particular asset can never have constantly for the whole time a fair value, okay? It must always either be overpriced or underpriced, right? So imagine having a compass that points you straight to the true value of an asset. That's the fair value gap. So whenever price, I mean, a particular asset is overpriced or it is underpriced, the spotting of the fair value gap actually points you to the actual value, okay? It spots where the value is supposed to be. In the case of underpriced, price has to push up to fill that value. In the case of overpriced, price has to push down to actually fill up that particular gap, okay, as a result of the mispricing. So how then do you identify fair value gap? Okay, that's the second thing we're looking at now. Okay, this is a situation where you have fair value gaps. All right, so this is a fair value gap, this is a fair value gap. Okay, how do you explain fair value gap? That's what we're looking at now. So this is over what I just said earlier. This is in the case of overrated fair value gap. You see, price, this is bullish candle, everybody knows this, right? Price pushed up, okay, these three candlesticks, it pushed up, and then this is a spike, the big one, a spike. So there is need for, this is overrated now, there's need for price to come down to fill this gap. So in my next video, that is if I get up to 200 likes on this particular video, then I'm going to make another video where I will give the detailed step by step how you can identify this and spot it at a glance, right? But all you need to know that this is overrated fair value gap, and then this is the space of the gap now. But the formation is what I'm going to tell you in the next video if I get up to 200 likes on this video. So price, there is need for price to come down because this asset or commodity has been overpriced, and you can see it in that hype, okay, of price. There's need for you to come down to fill this gap, and that is what we take advantage of. And this is an example of underrated. You can see it denoted by bearish candles. Price of this particular asset was underrated, and we're talking about mispricing, either overrated or underrated, and there is need for price to go up to fill this gap, right? So this is just how it is. Now let's talk about how to identify the fair value gap, not really in detail, but then the difference between the current market price of a currency pair or financial instrument of any kind and its fair value. That is actually what we mean by fair value gap. So we've got three main methods for spotting these gaps, namely fundamental analysis, purchasing power parity, that is PPP, and of course technical analysis, which is my favorite, right? So number one, you use fundamental analysis. Just like the previous day before that I'm making this video, there was a kind of spike as a result of the NFP news, which of course I'm going to still show you on the chart where it happened, right? There was a spike as a result of the news. So by using fundamental data, and of course as a result of that spike, you can evaluate economic indicators, interest rates, political events, and other macroeconomic factors to estimate the fair value of a currency or any assets that you want to look out for the fair value, and if there is any gap that is created. It's like being a detective, okay, piecing together clues from the economy to gauge the true worth of an asset. This method gives you a kind of comprehensive understanding of the underlying economic conditions that may influence the currency fair value. For instance, GBP USD, even XAR USD, USD JPY, and all that. So that is for the fundamental analysis. The next one we're going to talk about is what they call purchasing power parity, and this is the kind of theory that suggests that in the long run, exchange rates should move towards the rate that equalizes the price of an identical basket of goods and services in different countries. And of course, this is not always the same. It cannot always be the same. It can't be like that all of the time. But then, like I said, the fair value gap tries to maintain the law of nature, law of balance, right? So when there is a deviation from the purchasing power parity, right? When there is a deviation, when such a deviation occurs, they may indicate a fair value gap, right, on that particular asset or currency or instrument of any kind. It's like having a global price tag for everything, and of course, when prices doesn't match, when it doesn't match up, we've actually got a potential fair value gap on that particular assets or particular good or commodity on our hands, right? So that is just another way that you identify it, right? But my last, which is of course my favorite, last but not the least, we've got the technical analysis, right? And this is where we dive deeper into, right? And of course, is going to be based on this, all the revelation I'm going to make on fair value gap. Even in the next video, if I get up to 200 likes on this video, it's going to be basically on, in fact, more of, let me not say basically, but more of the technical side of it. So this is where we dive into historical price and volume data to identify patterns, trends, and of course potential trading opportunities. It's like reading the market's mind by analyzing its past behavior, which of course includes different classic patterns, candles, and especially candles, right? Now, when we spot anomalies between the current market price and historical patterns, we might just uncover a fair value gap that we can take advantage of, right? So now, what does it tell? Okay, now the trading opportunity is what we are going to look at now. So what does it all mean for us as traders when we spot fair value gap? Well, if we find an undervalued fair value gap, like the one you are seeing right on the screen now, this is undervalued fair value gap. Now, it's like discovering a hidden treasure. We see the current market price is very, very lower than the estimated fair value gap, right? So it's very, very lower at this point than the fair value of this particular asset at this point is supposed to be right at the middle of this big candle, but it's estimated very much lower because of this spike, right? And if we spot something like this, so we might want to consider it a buying opportunity, anticipating that the market price will eventually move up, okay, towards this value to fill this gap. This rectangle you are seeing is where the value is created. Okay, now there's deeper explanation to this, right? So we're expecting price to move up to fill this fair value. This is where we have the fair value, right? And the whole of this place is now called the fair value gap. Now on the flip side, right, on the flip side, which is of course this, now this is where you have the case of overvalued fair value gap. Okay, so it is just like a warning sign when the current market price is of course higher than the estimated fair value. So you have the fair value right inside this box, right? But then price hyped, moved up, spiked. So it's like a warning that this asset being skyrocketed, the price is going up, and then it's when we spot it, it's like an opportunity that we'll be expecting the market price to correct and of course move down towards the value, okay, where we have the fair value to fill it up, right? So that's just it. Now, okay, before the summary, let's take our take home. This is our take home right now before we summarize. Now, the fair value of an asset is its theoretical or intrinsic value based on fundamental factors, okay, market conditions and other relevant considerations, right? And then identifying fair value gaps involves analyzing economic indicators, exchange rate theories, and the historical price data to spot potential mispricing in that market, because it's actually mispricing of that particular asset or instrument you are trading, right? So when we find such mispricing, be it undervalued fair value gaps, it might be a buying opportunity, while overvalued fair value gaps could signal a kind of selling opportunities. Now, in summary, the fair value gap is just like having a secret roadmap, like I said earlier, and then that map could serve as a potential high probability trading opportunities. That is just to sum it up. And to actually identify the fair value gap of any trading instrument, there are three basic ways you can do that, which of course includes the fundamental aspect, the analysis, okay, using the fundamental data, then the PPP, which is purchasing power parity, and of course the technical side of it. So the goal is to spot those discrepancies, those mispricing between market price and its actual fair value, and then make informed decision based on that. So that is just how it is, right? So it is just like having a roadmap, like I said earlier, and that roadmap guides you into the trading opportunities that you have, right, on the trading chart. And when you take advantage of it, you make a whole lot of money stacked, right, for you. So in conclusion, of course, you have it already. And the financial enthusiasts and traders that we have here, you can go all out and look out for fair value gap even after watching this video. And of course, I'm still going to show you what is playing out on the trading chart. So the fair value gap is a powerful concept that can provide valuable insights for making trading decisions. By understanding how to identify and interpret fair value gaps, you can actually gain an edge. That can be an edge for you, right? Which of course will encourage that you have an edge in the market and potentially capitalize on mispricings to execute trades and make huge amounts of money. Remember that it has to be filled whenever there is a mispricing, as in a kind of imbalance. So if you found this video very, very helpful, don't forget to hit that like button, subscribe to my channel if you've not done so already. But then before we say goodbye for today, maybe we'll go to the chart and then let's see what's playing out. Now, here is what is playing out. This is British pounds and dollars, right? So GBP USD. Now, after the spike a day before today, as a result of NFP news, the market actually closed, right? The spike went bearish, the market closed at this point. Now, in that next video that I'm going to make, if I get up to 200 likes on this video, I'm going to show you how exactly you are going to spot this. And what you're seeing like this is an indicator that picks the fair value gap. And not just that, fair value gaps are peaks. There are a couple of other things you need to incorporate, you need to add. There are other things you need to look out for to further authenticate your decisions, okay, to either sell or buy when a fair value gap is created. And that's why we have these mappings, and there are other things you look at for as well. So if I get up to 200 likes from this video, I will know that yes, you really need it, and you have the need to be taking advantage of the fair value gap to trade profitably. So I discovered that where price spiked down as a result of that NFP news, it actually settled, reacted here for a while, and then this fair value was created. It was created across many other pairs that we're going to be looking at in a few seconds, right? So, and then that's why I made this analysis, waiting for market to open. Today is a Sunday, waiting for market to open, and then I will see the kind of reactions that's going to take place around here. That I'm looking out to sell, to buy, and expecting price to at least fill or tap into this gap. Well, let me not say definitely, but most likely, the probability is high that price will push up, will buy to fill this, right? To fill this. Even if it doesn't fill it up to this point, it has to tap into this gap to at least fill it. Remember, this is an indicator. I'm going to show you the setting, but in the next video, right? So that's just it. That let's look at ZAR USD, and then we'll look at the opposite of what we are talking about. This is for underpriced. Then we'll be looking at overpriced as well. So this is ZAR USD, the same thing. And ZAR USD, that is gold spot, is always very, very volatile. The same thing happened here. After the spike, it created this particular fair value, which was picked by the indicator, and then you see how price, after meeting certain other conditions around this place, which of course I said there are a lot of other things you need to look out for, and then you know how to trade the fair value gap profitably. So we can see price pushing into this place, and it has already tapped into that value gap, that was fair value gap that was created. Now the fair value of this particular asset, gold, is around this place, is within this gap that was created. So the price has spiked down, created a kind of fair value gap, a very mispricing, a very kind of imbalance that needs to be filled. Hence the reason why price is pushing up to fill it, right? And let's look at the same thing happened in Euro USD, but let's look at where we can see a kind of overpriced. This is USD JPY. You see that spike. Of course, if you understand how fundamental data, the effect, the release of news, how it works on the trading pairs, you will understand what played out here. So for assets or currency pairs that we have USD as the base currency, this is the effect, right? But when we have USD as the quote currency, the opposite is the case. Of course, that's fundamental for you. So we can see that this particular pair was overpriced, and then there is need for price to come down, okay, to fill this gap that was created. And already the other conditions that, of course, this is already at the premium level, premium zone, right? So it's one of the things you need to really understand for you to trade fair value gap very, very profitably. So many thanks for watching this video to this point. It's really nice for you to come around, and don't forget to hit that like button if you're getting value from this particular video, right? And I need up to 200 likes on this video, and I will know that you really need, because I want to create value oriented videos that I'm sure that my audience are going to watch, and they're going to gain from it. They're going to derive value from it. That's why I always seek your opinion, your suggestion. Leave your comment in the comment section below. Tell me you need it, and then I'll make more detailed videos. I can make more videos on fair value gap and some other smart money concepts and ICT concepts as well, so that this year we're going to make the money together, and everybody will be happy. This is CN Great Councils signing out for today, and then I'll be talking to you in my next video. Remember, the more you know, the better equipped you are to navigate the exciting world of Forex and financial trading. So thanks for watching, and we'll see you in the next video. Until next time, happy trading. Bye.